Okay, welcome back to the course, and in this video, I'm going to take a look at a correlation's probably a bit of a stretch on this one, but it is a bit of a driver, or at least something that you can take a look at. And this involves the euro US dollar currency pair and an indication of where we may be able to get a hint or a heads up as to where we are going next. So you can see that the euro US dollar pair has been rallying for some time. I'm recording this and we've about a year into an uptrend. So one thing that you should be aware of, if you are not aware of yet, is the US dollar index. And the US dollar index is a basket of currencies. It's a futures market that measures the strength of the US dollar against a handful of currencies around the world at different weights. And what that means is, so for example, the euro is 56-ish% as I record this of the futures contract against the US dollar. So when you think about it, even though the Swedish krona is in there, it's about 1.5%, and the British pound and the Japanese yen and the Canadian dollar, Australian dollar, all of these major currencies are in the US dollar index. At the end of the day, if the euro is rising, the US dollar index has to be falling because it is more than half of it. And by knowing this, you can use one to play off the other. And this is what I mean here. I'll go ahead and compare it to DXY, that is the index. You can see that it does diverge quite nicely. So, for example, if you are looking at a fresh new high over a resistive area, we kind of rose and we came back, tested it, and rallied. It makes perfect sense that if the euro dollar is rallying, being 56-ish% of the US dollar index, then we continue to drift. And you can see, in fact, you can literally draw mirror images here. So how do you use this as an FX trader? Well, you pay attention to these markets, and you know that perhaps here was an area that you were paying attention to because it was a significant resistance barrier. It should now be support, a little bit of a zone, if you will. Well, once you break down below there, you already know, because of the percentages involved, that the euro dollar is going higher. It has to. You can't say the same thing with perhaps the Canadian dollar. There is, and it happens, quite frequently. The U.S. dollar falls in the dollar index, but doesn't necessarily fall against the Canadian dollar. But by the numbers, it's impossible for one not to happen with the other. And you can see they are basically a mirror image of each other. I mean, I cannot stress that enough. This is a great little tool that a lot of retail traders, unfortunately, just don't pay attention to. So you can see that there would have also been a bit of a signal here on this trend line. The U.S. dollar index rallying. We fell. We came back. We retested it, and we failed. Well, you could have gotten along the euro dollar pair there. So keep this in mind. Pay attention to the U.S. dollar index. It's very, very important for the euro. Almost as important for the yen and the pound because they are a large portion as well, but not nearly as correlated as these two. And in fact, I know a lot of traders out there that pay attention to these two charts only.